How investing works for absolute beginners. If investing has ever felt confusing, intimidating, or overwhelming, this video is for you. If you're new to investing, you're definitely not alone. Most people were never taught this in school. And a lot of investing content online assumes you already know the basics. So, if you've ever felt behind, that's normal. In this video, we're going to slow things down. I'll explain what investing actually is, how the stock market fits into it, and how beginners can safely get started. No hype, no complicated strategies, just a foundation. At its core, investing means using money today to grow more money over time. That's it. You're delaying spending money now so it has the opportunity to grow in the future. This is very different from trying to get rich quickly. When you invest in stocks, you're buying small pieces of real companies. That means you're becoming a partial owner of that business. Even if it's a very small piece, it still counts. You don't need to work at the company. You don't need to run the company. You're simply sharing in its success. This is important because ownership changes how you think. You're not betting on prices going up tomorrow. You're investing in businesses that create value over time. That mindset alone helps beginners avoid a lot of mistakes. Companies grow by selling products, providing services, and earning profits. Over time, successful companies expand. They hire more people, reach more customers, and increase their earnings. As owners, investors can benefit from that growth. The stock market is simply a marketplace. It's where people buy and sell ownership in companies. Just like any marketplace, prices move based on supply and demand. For example, when someone wants to buy a stock, someone else has to be willing to sell it. If more people want to buy than sell, prices rise. If more people want to sell than buy, prices fall. That movement is normal. In the short term, stock prices move up and down, sometimes sharply. News, emotions, and fear all affect prices. But over long periods of time, markets have historically grown. This chart shows what happens when you stay invested. Early on, growth can feel slow. But over time, compounding starts to matter. Your gains begin to build on previous gains. This is why patience matters so much in investing. Compounding needs time to work. And that time is something beginners actually have on their side. Most of the growth happens later. This is something many people underestimate. They focus on finding the perfect moment to invest instead of staying invested long enough. Yes, markets go down sometimes. That can feel uncomfortable. But downturns are a normal part of investing. They don't mean the system is broken. For beginners, the biggest risks usually aren't crashes. They're waiting too long to start. Panic selling during downturns, or trying to be perfect instead of consistent. So if you're new to investing, focus on 3 things. Start small, stay consistent, and think long term. Those 3 principles matter more than any strategy. Let's quickly recap. Investing means owning pieces of businesses. The stock market is simply where that ownership is traded. Prices move up in the short term, but historically, markets grow over the long term. And for beginners, consistency matters more than perfection. If you're new to investing, this channel is built for you. Subscribe to Safe Start Investing for calm, beginner-friendly videos. In the next video, we'll look at what happens if you invest just $100 a month and why consistency matters more than income.